All right. Welcome to day three, guys. So today we're going to be talking about time frames, time frame breakdown in terms of top-down analysis, and how you can also be able to use ICC when it comes to, smaller time frames and everything, right? So the topic will be how to use ICC on multiple time frames effectively, and what we will be covering today is how to start from a higher time frame, which time frame to use for analysis, and which ones to use for entries. Also aligning market direction across time frames, which is the correlation part. Also, real chart examples, combining higher time frames and lower time frames in terms of, your entries and all those kind of things. And all the goal of this for day three, the goal is to build an understanding for ICC correlation across multiple time frames, right? So the marking up your chart will be also be for tomorrow, which will be day four. But today's topic, like I said, is gonna be about time frame breakdown, right? So let's get right into it, right? So I noticed that a lot of people they actually said like, okay, we trading the trading what is this? The trading the futures, right? The trading futures. So you're like, ICC is a bit different when it comes to futures, but I've yeah, the structure might be a bit different, but it's really not. Price is price, price action is price action, right? Um, so those are the kind of things that we're gonna be addressing today. So I'm just gonna show you how I would trade the futures. I don't trade futures. I just trade, straight market, in terms of, as far as, the markets are concerned, right? So let's see. Uh, all right. So just gonna start off with the 4 hour. You can start off with a daily, of course. Yeah, let me see if I can just turn these things off. Canvas. All right. It seems like I can't turn them off. All right, not a problem. So let's start.
Trying to turn the blue lines off?
Sorry?
You trying to turn the blue session lines off?
Yes.
It's under symbols. Go back into the settings and go to symbol. And then see the electronic trading hours.
Oh, oh, great. Thanks, man. All right. Let's start off. Yeah, let's just delete this. All right. So basically, 4 hours not really giving us that a lot. Gold has been running up, especially on the 4 hour. Also, even when it comes to the charts, I'll just delete everything here. And then 4 hours, just to give you guys the comparison in terms of how everything looks, right? So this is the gold also. This side is just been running up, So obviously you would want to go to down to a 1 hour just to see what you're working with there, try to expand the chart so you can see the candlesticks much clearer. Then you say, okay, I did have a push to the upside from this area here to the upside. So for now, we're just gonna focus here because there's not really much to talk about there at the top. The price has just been running up. So I'm just gonna use this past data from this area, right? In terms of how we could have taken trades going up, right? So as you can see, from here price showed us that this is a higher high, gave us a higher high, came back to this previous higher high, which it corrected, price corrected within this higher high, gave us a higher low. Price did give us a higher low, so we can just put this here, right? So price gave us a higher low and then started to rally up to the upside. So if you're using that indicator, the higher high, lower low strategy indicator by the long sum, for those who are not using it, you can see price plotting it, but it's not really 100% accurate, but it's 90% accurate most of the time. So it will plot mostly the highs, most of the time, and lower lows. So compared to plotting the higher lows and the lower highs. But overall, we had a nice push from here to the upside, give us an indication. Price coming back down to correct, and then price started to move to the upside, right? So now you know that this was a higher high, and then this was also a higher high, right? So your aim is to actually, just try to mark off, include the wicks. Um, I see most people are not including you must include the wicks of the 1 hour, because now the thing is of the bigger time frame, because the thing is when it comes to smaller time frames, there's a structure that happened there, right? So you might highlight this like, okay, price, I see price giving me an indication to the upside, showing me that we have a higher high at this area, and then coming back to correct. So price was correct into this area. So how do I take position to the upside? You understand? And also same thing here, but we'll come to this one, right? So how do I take position to the upside from here, where the indication initially happened, right? So you want to go down, probably, break it down, start with M30, see what M30 has for you, right? So like I said, you see price gave her that indication to the upside, gave you that higher high, and then started to push to the downside, giving it a higher low to this downside, right? But remember, I did say try to use it only for 1 hour and then 4 hour, just to give you where you are in terms of price, right? So now price gave you an indication to the upside, giving you this higher high, and then price corrected to the downside to give you this higher low, right? So now you want to go to 15 minutes, right? So just to understand also, because I think some people don't also know when it comes to where can I say now the correction has ended, right? So for us yesterday, this trade was pretty much, not doable, because the highs of these were pretty much almost close to each other, right? So I was like, okay, I sense some level of exhaustion, but as we know that, because of the current state of America, this is why gold is pumping up, because people in your investors are starting to put their money into, stable commodities. So you have that level. It's like, okay, I see price bounced off this level, price is bouncing off this level. Whenever it gets to this level, price has been bouncing off. You understand? So you want to mark off this level and see, as you can see, price came and then bounced off this level. So how do I take positions to the upside, right? So I said, okay, you can use 15 minutes and then also 5 minutes, right? But in order for you to do that, you need to have a correlation. You already know you are in an uptrend. So for you to be able to take trades on the uptrend, you need to see higher highs and higher lows to be made. You see, need to see this, all of this structure being happening, right? Whether it's on a small time frame or it's on a big time frame, this has to happen. As much as this is happening on a bigger time frame, overall, we know that this is our higher high, this is our higher low, this is our higher high, and then price corrected down to create that higher low, right? You need to have the same structure happening. So now 15 minutes is not giving us the structure. We don't see the structure happen on 15 minutes. So the best way is to go down to 5 minutes. So you can then be in correlation with what's currently happening in the market. So here we are. Price came back to correct to this level, gave us a lower high, then immediately gave us a higher low, right? This is on the 5 minute, right? Gave us then a higher low, because this low is higher than this one, right? As you can see. So what price giving us a higher low, it then started to give us, obviously this was a lower high, as you can see, but then a higher low again. Price then decided to give us again to the upside, but what do we know from what ICC say? Anything above this previous swing high that was made to create that indication, where the indication ended up happening to that high, anything above here would be bullish, right? So we know that, okay, this here, this movement here was the indication, because the indication came from this previous higher high that was created, so that market can go up and create another high high. You understand? And then that was the indication. All this movement, all of it was the indication. But now this is good for us, because it gives us, data, so that we can reference off of in terms of taking those positions. So this overall, in between this level of support and resistance that we have here, this would be a no trade zone, because now you don't know how far the correction might go, because Price could have easily, as much as came down, could have easily created a lower high and then created another lower low below this area before it can come back, build up nicely to the upside, right? So you want to see it as much as like I did show you. You want to see that low, that high low, higher high, low, higher high being made on smaller time frames, so you can be able to take those entries. And as you can see, when you come down to 5 minutes, you're starting to have that structure, right? Price started to give you the structure. Price gave you a higher high, it created a higher low. But this high high was above the level of resistance that we have. And we know that because the indication came, to create that high above this level, we know that okay, anything above here would be bullish, but we're not going to be taking any entries because this can be easily be a fake out where price can just come back, reverse down to the downside, as much as probably like it did here when price moved to the upside and then gave you some little bit of an indication, but didn't come back to this high on the 5 minute because this high was higher than the previous ones, these following highs. It was higher. So if you were looking to take a trade here, it wouldn't have went off. The market wouldn't have triggered the trade immediately. And the minute that it broke this low that you had here, then it broke this low that you had there, then it invalidates this whole setup in a way. You understand? Because now, even if the market is to come, it's not really gonna do much, or it can just come, hit here, and then pull back again. You understand? So you wanna also look out for those. But remember our entry model. How I said, if you have a level of resistance, you wanna see a price breaking above, come and retest, which will be, more of a, yeah, let me just say retest. But I will explain, I think, further again before price can move to the upside. So this higher high that was created above that the level of resistance, when price is coming from the downside, this higher high would be your entry point when price have created a higher low, so that you can be able to take those entries from here and then the stop loss just below that higher low that was created, right? So that's exactly what kind of happened here. As you can see, it did exactly happen actually. So you had this high high being created above that level of, where the indication came from. And you know that price gave you a high high here and then gave you a high high here. So this high high was the indication. So price has then corrected, started to push up to the upside. Then we have a higher high, we have a higher low. So now, with that being said, you just mark off this top, just mark off the stocks like, okay, I need price to give me a higher low before I can enter a trade to the upside, right? So now price gave you a higher low on a 5 minute, which was, I think, a 15-minute candlestick, which came down, and then it started to push to the upside with another 15-minute candlestick. So then your entry in terms of taking the gold buys would have came from here, and your stop loss would have just been down here, and then wherever your risk to reward ratio would be. If you were going for 1:3, you would have went up until, yeah, yeah. And as you can see, market never hit your stop loss. You see, the market never really hit your stop loss because now this entry model helps us a lot in terms of, us ensuring that we are able to, get into those sniper entries, because price can just fake out and then come back, fake out and then come back. But price hit immediately, went up, come back to retest this level and started to push to the upside. You understand? So that was what was currently happening, as you can see, right? So those are the kind of things that you want to be on the lookout for when you trading ICC, right? So pretty much you don't want to focus, on too many things. Don't look at, things like, and I did emphasize on this. Sorry, I did emphasize on this when I said you don't want to be focusing on, what is this, taking combining ICC with other things like other blocks and all those kind of things that are currently happening, because now you're only gonna be complicating things for yourself. As much as they work, yes, they work for other people, but for you, what works for you or what you want to work for you will work for you. Right. So this is what currently happened. And as you can see, your 1:3 was hit. You understand? And that's it. You understand? So pretty much on that. But in terms of correlation, in terms of correlating your time frames, same thing here. I think I will take I will show you. I wanted to actually show you also how to go about ICC on smaller time frames, right? So remember, I'll delete everything. Remember, structure is structure. Price action is price action, and market structure is market structure. If you see an uptrend happen, right? This uptrend, everything that is happening also on a small time frame, it is also same thing, like I said, correlation on a bigger time frame. So if you are overall bullish on a higher time frame and you still also have a structure where you having those high highs and high lows, and on a 15-minute you are also bullish on a structure like this. It also works the same way. ICC works the same way. Price will definitely give you those indication by breaking those higher highs, giving you a higher high and then coming back to retest maybe with a one candlestick, which eventually becomes a correction, but it will be a retest and start to push to the upside. So you can, if you are a scalper, you can then go down to 5 minute or 1 minute to look for those entries, and it will also be the same thing: a break above, retest, push to the upside, entry at the break above. You understand? So because I want to show you how we got into this trade on on KJPY. You understand? So let me just delete everything. I'm gonna delete everything on KJPY, right? So on a 4 hour, as you can see, the 4 hours not really showing us nothing, but we are overall bullish. As you can see, we have a high above these highs. We've been bullish for quite some time above these highs ever since actually I think on Monday. We've been bullish ever since Monday. We've been above these heights, right? So we have a high when we go to 1 hour, we see that okay, on 1 hour we have a nice bullish trend happening here, right? We have a nice bullish trend happening. So how do we capitalize off of that trend? You understand? So like okay, I see that okay, because price was just somewhere here when we started to do those things. Let me see. So, all right, I will answer you on that one. So basically, as you can see, today we were just here in the morning, and then price, this is what was happening. I marked off this level because I see price is bullish, it's still bullish, right? So we go down to 15 minute, and on a 15 minute, as you can see, on a 15 minute, we then said, okay, this was currently happening. Because include the weeks, like I said, include the weeks, and then this is what we had. This is what the kind of level we had here, right? So now on 15 minute, we had this break above, and then price started to break down. You understand? But now, as you can see, we were on a downtrend because 5 minute would then show it properly. If you go down to 5 minute, 5 minute will show it properly. Yeah. So we were on this downtrend that was happening. We started to break the lower highs, building higher highs and higher lows on 5 minute. Already that is correlating with the bigger time frame, is the correlation. So how do you take trades based off this? You understand? So now price broke above, give us a higher high, started to correct down, but it didn't break the lows which were here. It didn't break this higher low. It then created a higher low for us to be able to capitalize off of, right? So it didn't break this higher low, which was created the previous higher low. It then created this higher high, and then came to create this higher low that we have here, right? So our entry was based off this week that was created here on the upside, right? So in terms of taking our entry, remember I said a break above, a retest, push to the upside. So our entry would also be same thing on this level. You understand? So when it came to taking our entry, we just waited for the chart to come back, and then our stop loss would have just been below or just at this high low. But I was aiming up there at the top, but we had a nice clean 1:2, but I closed at 1:1 because I moved my stop loss below this level once price gave a higher high and higher low, and start to move to the upside. I then move my stop loss below this higher low here. And then price give us a higher high, give us a higher low, a higher high, and then give us a lower low. Then this is a shift in market structure to say, okay, price might now decides to be bearish. You understand? Because now this is also an indication, like I did say that, even on small time frames, this was an indication to say, okay, price is bearish now. Price give us a lower low. Price will give us a lower high. We need to see that lower high. You understand? Before it goes and create that higher high. If it went to create that higher high, then it would have kept holding. But it then created a lower low and then created a lower high and then started to move to the downside. That's when I sent that message into the group to say, look, price is starting to create those lower lows and lower highs. All right, sorry guys, let me just open for someone, just 2 minutes. All right, so sorry about that, guys. I'm back. Um, Let me just continue sharing. Okay. No. All right. So, oh my goodness. What happened here? Uh, yo, today's a mess, guys. Today's a mess. All right. So, sorry about that. My apologies on that one, guys. So, but as you can see, that is what's currently happening. This is how you can take advantage of the market in terms of applying ICC on bigger time frames and even on smaller time frames. As long as you are in correlation with the bigger time frame, it's much easier for you to be able to spot those trades. You understand? It is much easier for you to be able to even join those entries, so you don't think you are late or whatever the case may be, right? So even on this level that I did mark off here, let me just delete these. If you wanted to take some buys on that just to make a quick buck, the thing would have been, um we have this level here, we have this level here, right? But you would want to see a break above on a 5 minute, then a retest, and then probably take some bias on or off of that. And then obviously, if price was going to continue going up before it then shoot to the downside, same thing. You understand? So now we also have these on a small time frame. This is how ICC can be applied. Also, you also have this on a small time frame for you to be able to take the bias also now. If you are going to analyze this and say, okay, I want to see if I can take some bias because we are overall bullish on the 1 hour. You would want to see a chart because now it's giving you lower lows, lower highs, lower lows, lower highs, lower, and then here it's a higher low. Okay, this is a good sign. Now it's created a higher high. So you want to see another higher low, price breaking above, giving you that higher high, probably higher low again, higher high, higher low, indication to the upside because we already have this saying that above this level we are bullish. Break above to the upside, down, push to the upside, and then your entry would be off of this here that you have here. Your entry would be off of this that you have here. This would be your entry. And based on what you want and how your stop loss is and your lot size, obviously, this would be a quick 1:3. That is scalping. You understand? That is scalping. but you want to be in correlation with the overall time frame. That is the best thing that you can do for yourself. Be in correlation with the overall time frame. So, do you guys probably have any questions? Samson said, do you have to take into account how price is interacting, rejecting or breaking with other levels outside of our main highs and lows? Yes, you do. You do have to do that. You have to take in an account because price action will always give you structure. That's what I was saying. When it comes to a gold at the current state, I wouldn't advise, that much, because there's not much previous data to work with. But if you want to scalp, this is how you can go into scalping gold. You understand? You mark off those levels where price has been bouncing off of. You understand? Price came to this level, bounced down, came to this level, bounced up. Price came to this level, bounced up. Same thing, you understand? Came to this level, bounced down. So you look at those levels like, okay, this was currently happening. This was price is showing me. You understand? So I want to see this happen. And the best thing to can do for yourself is also wait it out. Wait for a setup to unfold. If price then continues to move to the downside, then it's still fine. It moved to the downside. You understand? But then you can then go back to 1 hour and say, okay, on the 1 hour, we probably getting, on the 1 hour, we probably gonna be having that higher low. Price is going to give us a higher low if we can continue to move to the upside to give us another higher high because this was an indication to the upside. And as you can see, it's not really coming back to correct back into the previous higher lows. So price may just be coming down, correct, and then push to the upside. So that's what I realized about KJPY and also GBP, JPY. They don't really go back into the structure, but you can then capitalize off of things like that where you have structure or have price been bouncing off those levels, then you can mark those levels of support and resistance where price has been, bouncing off of. Then you can then anticipate go down to smaller time frames like 5 minutes, and then you can get a nice clean trade off of that. You understand? So you want to have a consistent, as long as the trend is in correlation. We had a downtrend. Now you want to see higher highs and higher lows, which will correlate with the bigger time frames, with which is higher highs and higher lows. Is giving the same thing. So that means price whenever it's in correlation, your chances of winning that trade are higher, are much higher. You understand? So yeah, guys, do you have any questions? Sort about today, sort about that. Do you have any questions? Maybe something that I might be willing to ask to help you guys on that, especially focusing on today's topic when it comes to time frames and how to apply ICC on smaller time frames. Anyone?
No, thank you.
Are you guys covered? Are you guys covered? All of us. Are you guys covered in terms of, or maybe you will rewatch this just to get an understanding?
Yes, we will.
All right, all right. No, it's not a problem. But this is pretty much how this will eventually work out. You understand? So in terms of also plotting your chart, remember that's for tomorrow. I see someone send a message. Right. All right, no problem. Yeah, pretty much. That's how you can apply it in terms of scalping and also in terms of, overall market structure when you using H1s for, to get a trend or H4 to get a trend and then go to small time frames like 15 minutes, 5 minutes just to get it. If you don't see a structure in 15 minutes, go to 5 minutes just to see the structure. There will definitely be something there. You will see those lower lows, lower highs, lower lows, lower highs being created, higher highs and higher lows. So whenever a trend is broken, obviously you will see, it will start to break the other trend and create a separate thing. Like for instance, here we had lower lows and lower highs, which is a downtrend, and then once we start to have higher lows and higher highs, that's an uptrend. So now overall, we know we are overall bullish from the 1 hour because the 4 hours not really showing us nothing. We just saw bunch of candlesticks going up. But then we can go to 1 hour. 1 hour show that there's a nice uptrend that is happening. Now you want to just come and correlate that with the smaller time frame. Same thing with the entry, how we did with we got the entry. We had this downtrend happening to the downside. we started having higher highs and higher lows once price started to move to the upside. Now while we waited for price to break above this higher high, which was on the 1 hour, to give us that, that higher high above this level, correct back, give us a higher low, and then once price got there, we bought, and then we were in profits. Same thing, once price gave price came back to give us this higher high, price might then started to move to the downside, as you can see, to give us those lower lows and lower highs. Once price starts to give us those higher highs to the upside, you can be willing to buy above it because price has shown you that above this level is bullish. So you can then take those trades to the upside. I know I make it sound easy, guys, but with time you would definitely be able to get it. And also another thing, on the Hustle University, I will only be taking 20 people, guys. And then it's not gonna be signals group. We're not sending it's not gonna be signals. You're just gonna be having those sessions, one-on-one sessions with you, just to also help you with the trading, with help with you marking your charts, so you can be able to wake up in the morning and be able to take these kind of trades, you understand? So that's what will be happening most of the time. So it's gonna be for people who want to learn the market as is, learn to be able to spot these kind of things on their own and not be able to rely on signals. So it's gonna be $100, like I said, lifetime, and you're gonna be having more things to come. You will always be part of that. Nothing to pay, no subscriptions, nothing. Just once off, and then you're part of the group. And then I'm only taking 20. Then I'll see next month how many people I can take because I'll be doing everything alone. Like I said, I don't have a team yet. I'm still trying to build it also. So yeah, pretty much. So I can help you guys on a personal level also in terms of what you kind of just struggling with, risk management, the psychology, all those kind of things that you can be able to, improve on also, so that you can see more of you getting payouts from platforms. And I highly, highly recommend using platforms. Look for a reputable platform, buy an account, 10K, small things. It will help build this. Even if you have the capacity to buy $100,000, just buy a 10K one so that you can build those habits, get those certificates, get those payouts. It then builds confidence towards what you're working on. Then once you're ready, you can get to $100,000 account and then be able to understand how much you're risking per trade, what you're looking to get, and those risk reward kind of things that you will be looking to do. So pretty much, you want to see more of that. And then, yeah, thank you very much for attending, everyone.
Thank you.
All right, bye.
Bye bye.